For our audience worldwide, good evening and welcome to Money Matters from our studios here on Caraba Avenue on QTV. I am Malik M. Jallo and this is Money Matters. Welcome back. In today's diary, we will look at the international foreign exchange market, we will look at commodity prices, and we will look at the interview segment. And today's topic on the interview segment will be public debt and public finances. But let's flip and we look at the foreign exchange market. Dollar has been depreciating against the major currencies as indicated on our display on your screens. Dollar opened at 56.19 and it peaked at 57.12. Then it went further to 57.28, which is the close. So which is the highest in the week. What does this mean for importers, for businesses in the Gambia? As an importing country, this means that our import bill is going to be higher and the demand for dollar is going to be higher because importers need more dollars, which in other words translates to more dollars to get one single unit of dollar enabled to settle their bills. This could also translate a hike in prices, in commodity prices and other consumable in the country. Dollar has been on the streak, it's on a rally. It has been the dominant currency since the COVID-19 and the Ukraine-Russia war. We have seen a little bit of recovery on the euro. It opened at 55.33, then it peaked at 55.88 and later went further to 56.50. That is a bit of recovery. But if you look at it in relation to the dollar, it is still below parity. And as uncertainties still remains on the direction, the policy direction of the ECB and its ability to tame inflation and also the energy crisis facing Europe. This, although the ECB has indicated its intention to hike 75 basis points in the coming meeting that is in November. This has shown a little bit of recovery, supported the euro into a recovery path. Pound sterling has been also a bit of recovery. We have realized that Liz Truss resigned during the week as pressures mount on her inability to steer the direction of the fiscal policy, which the markets were very, very wary of whether she was able to do when she first introduced the mini budget, which further led to the firing of the Chancellor of the Exchequer, and finally she is gone. So this has introduced a bit of confidence in the markets, and the UK government needs to be very clear about fiscal policy as inflation is on the hike in the United Kingdom and the Central Bank of England is on a strike to ensure that the inflation is being tamed down and it is going to continue to increase its rate. The international cross rates, as indicated, all currencies remain still less stronger compared to the dollar. As indicated before you, the euro opened at 0.98 and it closed at 0.986, from 0.984 to 0.986, which indicates a bit of recovery. Pound opened at 1.14 but closed lower at 1.16. As indicated on our charts displayed before you, pound opened at 1.14 and we can see a downward spiral of the pound sterling, and then it bottomed on the 19th of October at 1.12, then gradually picked up, but still closed lower than the opening. Euro have been steady at the beginning of the week, and it bottomed at on the 19th of October at 0.97 but closed a bit higher at 0.98. All these are indications that the dollar remains the strongest and the most cherished currency at the moment by investors, as it plays an important role in international trade, and it's also seen as a safe haven, as the Federal Reserve has been more aggressive in terms of instituting a tight monetary policy which is meant to fight inflation. Those were what we have for you on the foreign exchange market, and when we come back we will look at the commodities market. Welcome back. That was the foreign exchange market. We take a look at the commodities market. We will look at energy, metals, agriculture. We will look at Brent crude or crude oil, which opened at 92 and closed at 93. That shows a little pickup or a little growth in prices for crude oil. Gold opened at 1640 and it closed at 1660. That is a little bit of shift compared to last week, where we saw gold was on a decline. So investors has a little bit more appetite for gold as a hedge against inflation. Rice has been on a steady decline. It opened at 1670 and closed at 1630. These commodities are essential, especially oil, as we have seen Saudi and its OPEC members has moved forward to deciding to cut their oil supply in the fear of slowing global demand, given the IMF slashed forecast in economic growth of the global economy. That was what we have for you on the commodities market. Welcome back. We have looked at the international foreign exchange markets. We have looked at commodities market, and now we are heading to the conversation section. Today, our topic of discussion is public debt and public finances. What is public debt? We have seen over the period or over the years the ballooning of the public debt, both external and internal. What are the implications of this on our macroeconomy, and how does this affect our fiscal position? With me today is somebody with an amazing profile. I have tried to summarize the profile as short as I can, but it's an amazing. Dr. Keba Jane from the University of the Gambia. He teaches econometrics and mathematical economics. He's a World Bank Fellow, and he has been to the University of London School of Economics and Queen's University in the UK. He's also got his PhD from the University of Essex. Like I said, it's an amazing guest I have today. Dr. Jane, welcome to Money Matters.
Thank you very much for the invitation, Mr. Jado.
Great. So, Doctor, our topic of discussion today is public debt. What is public debt?
Yeah, public debt is government borrowing. Governments, like individuals, sometimes fall short of their revenue expectations. Individuals, if we fall short of income, what do we do? What do we resort to? We borrow. So government borrows. But what makes government borrowing complicated is government can borrow from the domestic market, and the government also do borrow from foreign countries. So this is what makes government borrowing very, very, very complicated.
So there is domestic borrowing and there is international borrowing. In the Gambia, we don't issue euro bonds at this state level. So most of the borrowings, where does it come from if it is international?
Yeah, from international sources, most of the times it is from loans and grants, mostly loans from multilateral development organizations like the Islamic Development Bank, the World Bank, the IMF, and the African Development Bank. We also have bilateral borrowing from our friendly countries like the Saudi funds, from the Kuwait fund. So these are the two main sources of borrowing when it comes to external borrowing. From domestic sources, it is mostly the government borrows through the Central Bank of the Gambia, because the Central Bank of the Gambia is the banker of the government. So whenever the government needs money, it borrows through the central bank. So what the central bank does is the central bank sells treasury bills and T-bonds. But these are just pieces of papers in which they promise individuals that we owe you. So that is why it is also called an IOU system. Yep. So this is how the government borrows. But this borrowing, they have their advantages and disadvantages. And maybe we'll get to those.
Yes. So, but before we get there, so you were saying they borrow from the domestic market and international, and through the domestic market they issue T-bills, which are basically financial assets. That's why they said financial assets. It's just a paper, securities that indicate government owes you a certain amount of money. But instead of borrowing, why don't we just print money?
Yeah, we cannot print that money. The only country that can do that in this world is the US. Because the Gambian dollars is dominantly used only in the Gambia. So the more you print money, you are injecting so much liquidity in the system that will be inflationary. So if we just print money, there will be a time where no one will accept the Gambian dollars as a legal tender. And the only reason why you received, or you will, if I give you $100 today, you will receive it. It is because you have confidence in the notes. It is just a piece of paper without confidence. Yeah. So we cannot print, but countries like the US, they can just print money out of the blue because you have more dollars outside the US than inside the US. So the Americans can just print money, and then me and you in the Gambia, we will be rushing to have that money because the dollar is the anchor currency. So that is why countries like the US can do it. And the EU, to a large extent, can also do it, and the UK. But there is also so much geopolitics that surrounds this system.
Right. So you are saying we cannot print so much currency because when we print a lot of the money in circulation, and there is no this gonna, because in economics we said the higher your nominal income, the higher your demand for money. So if people are receiving so much money in their pockets, then their nominal income is high, so they will demand much more money to buy goods and services. If that is not compensated with higher supply of goods and services, obviously inflation runs in. But domestic debt, to be specific, has been on the rise, and there is something. I did a data check, and I found something that is very interesting. In 2020, the total debt standing was 77 billion. Out of this, 33 billion was domestic and 44 billion was external. Okay, in 2021, total domestic stand at 88 billion, which is a growth in the debt portfolio. And out of this, 37 billion was on domestic and 51 is external. But here is the point. 2022 so far, that is the second quarter, because the third quarter bulletin is not yet out. Domestic debt, total debt, is standing at 88 billion. So we are into half of 2022 as at this record stand. And we have already reached a debt level that we were at the end of 2021, the entire year. What would you say is the cause of that? I know they will say COVID and all, but what would you say? Is there any other reason why is this the case?
It is not COVID. You have a government that is hungry, to deliver promises, but they are not taking into account the realities of the economy. And then not only taking into account the realities of the economy, what they fail to do is we are not mobilizing funds. We rely too much on taxations, we rely too much on donor funding, and we rely too much on borrowing. So that is where you would end up. But we take, for example, the diaspora. The diaspora, the amount of remittances that we receive is more than 2-3 times the amount of loans that we receive from, or loans and grants we receive from development partners. But how are we trying to leverage remittances, remittance flows, and diaspora resources? We are not putting effort. We are not putting deliberate efforts in mobilizing funding. In the country, we have a very large informal sector that is not taxed, and then we have a very high tax rates. We are among the highest. We have among the highest tax rates in the world. That is why businesses are folding their files and then moving to other countries. What should we do? If we just depend on the conventional way of everything is government finance, we are not trying to simulate private sector funding. The private sector can finance government projects. These are things that we can learn from our neighboring countries like Senegal. You go to Senegal, Jamñajo, most of the roads are private sector funded. But these are things that we are not doing. We think everything should be done by the government. The government should be a facilitator. The government can just develop projects, structure the projects to make it commercially viable. Once it is commercially viable, the government does not need to finance it. It will be funded by private sectors.
But you talk about taxes, that we have the highest tax rate, and you talk about mobilization of resources. So if you say that we need more resources to mobilize more revenue, and you already mentioned that taxes, is that not intuitive? Yes.
It is not counterintuitive. We have a very high tax rate, but we have a very low tax base.
So how do we generate a large tax base?
We can generate a large tax base, but it is just conscious effort. Go to Serekunda, maybe 70 out of the 100 businesses you will find there are not registered businesses. Why are they not registered? Because the tax rate is very high.
Yes,
they do not have the incentives.
Yes, and people will say that if you register your business, you are displaying yourself for the authorities to come after you.
Even the process of registering business is cumbersome in the country. Even only the simple process of registering business, it is very cumbersome.
There's one point that you mentioned, that remittances, we are not leveraging remittances. If you ask me, I would tell you that, well, remittances is the main supply of FX to fund our import bill.
Absolutely. Yeah.
So, indirectly, are you telling us that the macroeconomic structure, the fundamentals of the macroeconomy is not on the right trajectory?
Yeah. The only reason why we are not bankrupt as a country, it is because of remittances.
Are you sure we are not bankrupt?
Like we are we have a very high risk of being bankrupt if you look at the World Bank debt sustainability analysis, because the risks of debt distress is very high.
In fact, in 2020, the debt to GDP ratio is 84.1%. In 2022, so far, actually, let me correct that. In 2021, it is in 2020 is 84.10, and in 2021 is 84.74. So we don't know what 2022 is going to look like. We still have a quarter to the end of 2022. What does this what's the implication of this? Are we in a debt stress level in this situation?
That is where we are heading to. That is where we are heading to. And then if we are not mindful, it will be very painful if we are going to reverse back. What if once we are in debt distress, the things that we are going to implement, based on orders from the IMF or the World Bank, the implications will be very high. Yep.
In 1997, the Asian crisis, when the IMF stepped in to help all these countries, the currency crisis caused by, which started from Thailand, if I remember, the Thai baht, and then across East Asia. So the IMF stepped in. One of the first conditionalities of IMF is austerity, cutting expenditure. Now imagine in this kind of situation when government is subsidizing fuel and the living cost in the country is just skyrocketing, and then IMF steps in. Because as we are speaking, the chances of us going to the IMF for a bailout in terms of balance of payment situation is very high. So what do you think it's possible that we will go there? Do you expect that?
We have been there in the 1980s. Yeah, we have been there in the 1980s, and then what we are doing right now is more of what was happening then. And then if we are to do these austerity measures, it is going to be very costly, because if you look at the Gambia, we have very high unemployment rates. Yeah, the highest employer in the country is the government. Yeah, our pay bills, is more than 23% of our annual expenditures. So some will say we have a bloated public sector, but not a bloated public sector, but we have a very unproductive public sector.
Do you think the government is too big? Because usually if you look at advanced countries, you find out the size of government in terms of spending and in terms of employment creation is very small compared to the private sector. But in the Gambia, and do you think this affects our budget? Because if you look at our budget, the chunk of it is on recurrent expenditure.
Yes, the chunk is on recurrent expenditure. But I will not say it is too big, because we have two sectors, the educational sector and the health sectors. These are mostly private, these are mostly government driven. Yeah, and this is where you have most of the government employees, especially in the education sector and the health sector. So without a private settings that can deliver quality health service and quality education, it will be hard to argue that the government is too big, and then we need to resize the number of employees that we have.
Because the reason why I'm saying this is, I know you mentioned the higher health sector and education, but look at trade and integration. This is an important ministry in the government. It's an important function, because Gambia is part of ECOWAS, is part of all these regional bodies. And if you look at the allocation of these ministries, as also Ministry of Interior, if you look at the allocations of these ministries, it's way less infrastructural development. You said government should be a facilitator to provide a conducive environment for private sector to step in. But with this kind of budget stress, do you think it can provide that conducive environment?
Yes, I think that is something that I am not explaining explicitly. Lack of funding is not an excuse for underdevelopment. Lack of funding is no excuse for underdevelopment. It is just that you don't understand how the global financial system works. For example, I will just give you an example. We want to build a bypass from, let's say, Yundum to Birkama, or we want to build a bridge from Bara to Banjul. You don't need that to be financed by the government. What the government needs to do is just prepare these feasibility studies. Tell us how many cars do fly from Banjul to Bara, or from Banjul to Birkama. How much will it cost to build the bypass road? Yeah, how much vehicles will use the road, and how much are they expected to pay on two roads? How long will it take for you to recoup your investment? If it is going to take 20 years, you invite the private sector, flow out your expression of interest. It is going to take 20 years to recover your expenditures. Then we will give you 25 years. 5 years is your interest. That is how America was built in the past 100 years. That is how Europe was built. We call it the boot system: build, own, operate, and transfer. This is what Senegal is using right now. Go to Senegal, in Diamniadio, the new airport is not financed by the government of Senegal. Most of the infrastructure you see in Diamniadio are not financed by the government of Senegal. But if you are not creative, if you do not use the innovative financing mechanisms that are in place, and you think the government is the sole responsibility to finance all these projects, then you will end up being bad.
Great. We are running out of time. I wish we had much more time to discuss. But quickly, I want you to help me differentiate two things: monetary financing and deficit financing.
Monetary financing and deficit financing. So when you have debt, you want to spend, but you don't have money. So how are you going to finance your debt? Yes. So some is debt. That is debt financing. You can also monetize your deficit by printing money.
By printing money.
Yeah, but that is not the leverage that we have.
Okay.
Yes.
Like you mentioned earlier.
Yes.
Okay. So, doctor, in just 1 minute, how should we position ourselves fiscally to ensure that we have all these things that you have mentioned running in terms of fiscal prudence and also providing a conducive environment for private-led intervention and investments?
Yes. So we have two sides. There are two sides of the same coin. The expenditure side and the revenue side. On the expenditure side, we need to make sure that we streamline government spending, especially on traveling, especially on government travels and foreign embassies. And we need to increase private sector participation in financing government projects. Yeah, that is on the expenditure side. On the revenue side, we need to minimize the amount of leakages in the system. Yeah, financial leakages in the form of tax revenues and other forms of leakages. These are things that we can do, and we also need to start offering long-term bonds, long-term instruments, financial instruments with long-term maturity, because the 91 days treasury bills, we will always have that rollover risks or refinancing risks. Why not we start thinking of having things like diaspora bonds that will have maturity years of 5 and above? This is the way we can restructure our debt so that we can better position ourselves. But I will just conclude with this. Yeah, from my training and experience, no country has ever developed through luck. Development is the outcome of deliberate policies. Yeah, you must know what to do, when to do it, and how to do it. If you don't do that, yeah, economic and social hardship will be our daily realities.
Thank you, doctor. That was fascinating. I would have loved to come in a little bit on the bonds and issues like that, because there's a program that has been rolled out and there's other implications on that. But we don't have time. Probably we'll catch up some other time and we will deliberate on that. From me, Malik M. Jallo, this was Money Matters. Until we come your way next week, thank you.